Who's that guy? $300? You don't need to pay for anything. All you gotta do is subscribe to the channel, like the videos, and comment, and you get all the knowledge you need right here. This is Walter FX, and welcome back to the channel. If you haven't yet, subscribe, and don't forget to like the video and turn on the post notifications so you get notified anytime I drop some new content. And let's get into it. So in the previous tutorial, I told you today I'll be telling you what the different currency pairs are. You have three currency pairs, which is the major currency pairs, the minor currency pairs, and the exotic currency pairs. But before I tell you the different types of currency pairs and what they're about, I will first need to tell you about volatility. So volatility is a measure of how much price swings within a given period. Okay, let's just say, basically in Forex, volatility is a measure of the upside or downside of price. That's like, it takes the volume. Okay, let's just say the more volume, the more volatile a currency pair is. Like if the price moves towards the downside or the upside faster and larger, it means it's very volatile. Which brings us back to the currency pairs. The currency pairs are grouped according to their volatility. First of all, we have the major currency pairs. These are pairs that contain the US dollar against any other major currency pair, such as the euros, the pounds, or the Japanese yen, or the Australian dollar. So when you have a currency pair of the US dollar and the pound sterling, that's a major currency pair. These are the the most volatile currency pairs in the markets, meaning that there are large volumes of traders who normally trade those pairs every day. So you're expecting very large movements from those pairs every time you are trading those pairs. It works in both ways. It could work in your favor and it could always work against you, depending on how good of an analyst you are. That's why it's always key and very important to take your time in analyzing a pair and trusting your instincts before you take a trade. You have to make sure that your setup has presented itself, because when you're trading volatile markets like this, it could work to your advantage or it could work to your disadvantage. So to put it in your favor, you just have to make sure that you have properly done your analysis. Like, you know, when you've put in the work, that you just trust that, okay, whatever happens, I know that I've done the right thing. You have to be at that stage, because as much as it can work in your favor, doing the wrong thing is just as bad as it can kill you. Number two, you have the minor currency pairs. So these are pairs with major currencies such as the pound sterling, the euros, the Australian dollars, but do not contain the US dollars. So an example of a minor currency pair would be the Australian dollar versus pound sterling, or the pound sterling versus the euros. These pairs are volatile, but not as volatile as the major currency pairs. That is, traders trade it a lot, but the volume will never be as high as the major currency pairs, as US dollar is the most major currency, it's the most traded in the Forex market. So these minor pairs now are pairs that contain other major pairs but does not contain the US dollar. So will I advise you trade minor pairs? Sure. If you look at the market, you open the charts and you see it's volatile enough for your risk appetite and your reward appetite, you can take the trade. But don't expect them to move like the major pairs. The major pairs are the ones that contain the US dollars, and those are the most volatile. So this helps you in your search. When you just open up your application, you want to go and trade. If you're looking confused, wow, there are so many pairs, all you have to do is just look for the major pairs. Anyone that has US dollar versus another major currency, such as the pound sterling, the euros, and the Australian dollars. Yeah. Now, number 3, you have the exotic pairs. These pairs are like pairs that have the US dollar versus another currency that is not major. Like I told you, the major ones are the euros, the Japanese yen, the Australian dollar, the pound sterling. So where you have USD versus the Russian currency, USD versus Naira, those are exotic pairs. They are barely traded. They have low volatility. Like they're in very low volumes. In fact, just stay away from them. Like there's a reason why big time forex traders don't trade them. Just stay away from them. My advice personally is you stick to the major pairs. Sometimes you can trade the minor pairs if it's moving in your favor. You look and it's moving in your favor. But I would advise that every time you open up your laptop or your phone looking to enter a trade, just head to the major pairs, because what we're looking for is volume. The more volume, the more money you can make, because we make money from price changes. So volatile markets presents more price changes, which presents more opportunity for you to make money. You make money in forex after you've done the right thing. You make money in forex through discipline and consistency. Let me say that again. You make money in forex through discipline and consistency. It's not a get rich quick scheme. It's not a money making machine. It's a business. And what makes your business successful? Discipline and consistency. So don't think because volatile market, the market is very volatile, as much as it can reward you, it can hurt you even more. You know, they say the power of negativity is always stronger than that of positivity. So you have to make sure that you have properly analyzed these markets and you put yourself at an edge and the favor of making money rather than the market eating you alive before you trade the markets. That's the difference between gamblers and forex traders. Gamblers trade based on luck, while forex traders trade based on edge and analysis. Do you get me? So don't just jump into a market or jump into a trade hoping. We don't hope in the forex market. We find our edge in a volatile market and we let the odds play out. We play percentages. You understand? Just like every business faces losses. You know that. There's also cost of running a business. In the forex market, you will lose, but if you can properly manage that risk by finding a proper edge, you will still make profits, because every business has a cost of running. Let's say you're running a restaurant, you will still buy the ingredients they use to preparing the food. You will rent your space. You will pay light bills. So all the losses you face in the forex market, those are the cost of running a business. Something has to be given. You understand? Something has to be given, and those is what those losses are. So it's when you're consistent enough to follow strict rules and disciplined enough not to break them, you will eventually see those profits and enjoy them. But when you treat it like a gambling scheme, I'm sorry for you. That is really what I can say. You won't see nothing. The market will not reward you. Come again, I'm going to say it again. The market only rewards discipline and consistency. So if you stay tuned and be dedicated as I walk you through all you need to know in the forex market, I promise you, as long as you stay disciplined and you show up every day, you will be rewarded by the markets. Forget what the gamblers tell you. They don't have the proper knowledge, and that is why you're here for free. Once again, for free. Like, all you have to do is just subscribe, like the video, and comment. And I'm going to give you all the knowledge and all the guidance you need to being a profitable trader. Like, I hope you enjoyed this class, because I did. I enjoy talking to y'all, honestly. So I would like your feedback. An assignment I would like to give y'all. You reply as a comment in the comment section. I would like to see that, to make sure that you're paying attention and you're following me, because I want to make sure that you learn. I want everybody to make money. At least everybody I know that is ready and dedicated. And you showing up here shows me that you're dedicated. So today's comments, you'll be leaving in the comment section is, you tell me what a lot is in Forex terms. Because in the next class, I'll be telling you all you need to know about lot sizes, leverages, spread, and all that. So drop in the comment section your assignment. What is a lot? While I see you in the next class, stay tuned, like the video, and if you haven't yet, subscribe. It's Walter FX, and I'll see you next time. Cheers.